All right, let's talk about Meta. Now, if you just glance at the stock chart, it looks, well, pretty calm, almost kind of boring, right? But believe me, right beneath that quiet surface, some really powerful market forces are building up, setting the stage for what could be a huge move.
So let's get right into it. The whole situation really boils down to this one big question. Is Meta just coiling up for a slow, steady grind higher? Or is it actually sitting on the edge of a cliff, about to take a really fast tumble? And the answer, it all hinges on one very specific number. And here it is. At the time of this analysis, Meta is sitting at 673 and change. Now, this isn't just some random price. This is what we call a critical inflection point. The stock is literally balanced on a knife's edge. And the direction it tips from here is going to completely change its personality. Okay, so to really get what's going on, you have to understand this idea of the $670 danger line. Think of it like a border. On one side of that line, everything's in a zone of safety and stability. But on the other side, it's a zone of danger and, well, acceleration. And it all comes down to a force called gamma exposure. Now I know, gamma exposure sounds super complicated, but don't worry, it's actually pretty simple when you break it down. It's just a way to measure what the big market dealers have to do to manage their risk. And depending on which side of that 670 line we're on, these dealers either have to act like a brake, slowing the stock down, or like an accelerator, speeding it up. And this breaks it down perfectly. You've got two states. On one side, there's positive gamma. Think of this as the market breaks. The dealers are forced to buy when the price drops and sell when it rises. It keeps everything calm. That's the green zone. But then you have negative gamma. That's the market accelerator. Here, dealers have to sell into weakness, which just pushes the price down even more. It's a feedback loop. And that is the red zone of danger. So you've got to picture this. Right now, Meta is basically stuck. It's totally sandwiched between a heavy price ceiling way above it and a pretty strong floor down below it. And these levels are being created by huge amounts of options that basically dictate where the stock is going to run into trouble and where it's likely to find some help. So let's start with the top. You've got the ceiling at $700. This is known as the call wall because there are just tons of call options sitting there. So as the price gets closer to 700, the dealers who sold those options have to start selling stock to protect themselves. And all that selling creates this heavy lid that makes it really tough for the price to punch through. And then below, you've got the floor, right around 640. This is the hedge wall, and you can think of it as the main safety net. It's a big structural support level where you'd expect buyers and dealer hedging to finally step in and put a stop to any slide. But listen, between that ceiling and that floor lies the single most important number on the entire board, 670. This isn't just another level. This is the trap door. It's the trigger. It is the exact point that decides whether we're in that calm green zone or that dangerous red zone. Everything that's about to happen starts right here. Okay, so let's play this out. Path number 1. What happens if Meta manages to stay above that 670 trapdoor? Well, then we stay in the green zone, which points to a slow, pretty stable climb. Here's how it would work. As long as the price is north of 670, we are in positive gamma. This means the big market dealers are acting like stabilizers, just smoothing out the ride. They buy the dips, they sell the rips. So as the price slowly drifts up toward that $700 ceiling, the dealer selling is going to get heavier and heavier, acting like a brake on the rally. The result isn't some explosive move higher, but more of a slow, choppy grind. So, to put it simply, in this green zone, the dealers are kind of your friend. Their hedging provides a safety net below and a lid above. And that creates a really calm, low volatility environment for the stock. But what if that trapdoor swings open? What happens if Meta slips below 670? Well, that's when we enter path number 2, the red zone. And this path looks very, very different. We're talking a fast, volatile drop. The second the price breaks below 670, the whole rulebook gets thrown out. We flip into negative gamma. And now, instead of stabilizing the price, dealers are forced to do the exact opposite. They have to sell more stock as the price is already falling. This selling just pushes the price down even further, which forces them to sell even more. And you get this really dangerous feedback loop. And what that does is create what traders call an air pocket in that space between 670 and 640. There's just nothing there to stop the fall. There's very little dealer support in that zone, which means the price can drop really fast and really hard until it finally slams into that next big support level down at 640. Okay, so right now it probably feels like a coin toss, right? Green zone, red zone. 50-50. But there's a little twist here. There's a hidden warning sign in the broader market that suggests that that dangerous red zone path might be a little more likely than you'd think. Just look at this. It's kind of wild. On the left, you've got the S&P 500, the whole market, just kind of chilling, slightly up. Things look fine. But then you look at the VIX, that's Wall Street's fear gauge, and whoa, it is spiking, up over 11%. Now, this is not something you see every day, and the source material puts it perfectly. It is very rare to see the market and the VIX go up together like this. It's a huge red flag that even though stock prices are calm on the surface, underneath, big money is getting nervous and they're buying protection. Fear is quietly creeping into the system. So, what's the takeaway for Meta? It means the chances of a sudden rug pull, where the floor just drops out unexpectedly and pushes the stock right through that 670 trapdoor, is significantly higher than the calm price action would lead you to believe. All right, so let's boil all of this down to a sharp strategic takeaway. After all this analysis, it really all comes down to watching one single number. And here it is, the whole game plan on one slide. It's simple. If Meta stays above 670, the outlook is for a slow, range-bound drift up towards 700, with the dealers acting like a safety net. But if Meta breaks below that line, look out. The outlook flips to a fast drop towards 640, with the dealers becoming an accelerator, pouring gasoline on the fire. So it boils down to this. The bullish case is simple. Meta absolutely has to hold above 670 to stay in that stable green zone. And the bearish trigger is just as clear. A daily close below 670 signals that the game is completely changed, and the volatility regime has flipped on a dime. So you can forget all the other noise for a second. The ceiling, the floor, that rising fear in the market, it's all important context, but every piece of it points back to this one level. The entire story for Meta, right here, right now, hinges on the battle for 670. There you have it. You now have the map, you understand the green zone of stability and the red zone of volatility, and you know the one number that acts as the trigger between them. The only question left is, which path will Meta choose?